We have a Tradespoon. Let's talk about current market conditions. We are retesting the yesterday's low. Last time I checked. Right, so we are right at that 2840, 2830 level, right at yesterday's low, probably making new lows. This has been the pattern for the past week since the discussions of tariffs kind of resurfaced. United States imposed 25% tariffs on the first $200 billion of Chinese exports, so raised the tariffs, and now negotiating a new agreements, which potentially can take a long time. Market doesn't like uncertainty, so that volatility can persist going forward. If you look at the support, the major support level is right around 280 level. So 280 has been a strong support that spans for the past year. We've touched this either as a support or overhead resistance. So as long as the market is staying at 2800 level, worst case scenario maybe 2780. That's roughly close to the 200-day moving average. We're trading below the 50-day moving average right now, if you plot the 50-day moving average. 2800, 2780 is right where the 200-day moving average. So right now, I still think we are in the late stage of a bull market. I think it's too early to become bearish on the market. I think there will be resolution. I'm not sure when it's going to happen, but I think we still have a strong and healthy economy in the United States. Earnings season outperformed the expectations. So I think the short-term 2800, 2780 level will hold. And I'm going to structure my positions accordingly. If we do break the 200-day moving average, I would turn bearish if that event does occur. A lot of it is going to depend on what's going to come out of the negotiations. So everybody is waiting for some clarity from the White House in terms of that. Looking at we can look at the spiders chart here. Let's do 1 day. So we're right at the yesterday's low, 283.75. This is the yesterday's low. Looking at the 1-day chart, again, second day in a row, we're trading below 50-day moving average. That would be considered bearish. We've closed above 50-day moving average. That's bullish. We traded today above 50-day moving averages. It's bullish. If we close 2 days in a row below 50-day moving average, then potentially, again, depends on what's going to come out of the White House, potentially retesting 280. But we are approaching what you would consider oversold position. So if you're part of the live trading room, you would see that at this point, I'm slowly start closing the hedges that we put on Monday and putting long-term bullish trades with the time outlook of August and September to give myself more time for some of the tariff rhetorics to settle down and find at least some kind of understanding what the next course of action is. Looking at the VIX, surprisingly, we've reached 24. We had a little panic yesterday, not exaggerated panic. We've seen 27, 28 in October and November. In December, we were as high as 36. But we're approaching what I would say levels of nervousness, 27.9, 26. Today, we actually dropped all the way to 16, and right now it's trading 20. 20 is historical average. So definitely, you don't see a panic in the market as of right now. I don't think the market is oversold, so I think there is a little bit more room to go to the downside on S&P level, as I said before. Let's see some of the sectors. QQQ, trading below the 50-day moving average, similar to spiders. Looking at the Dow Jones, more sensitive to the Chinese tariffs. Conglomerates, large cap multinational companies, they are below 50-day moving average, so pretty bearish, right at the 2 standard deviation Bollinger Band. So also approaching oversold condition. I would say 253, potentially 250 is a strong support that spans all the way to October. And we've touched these levels several times. So I think, again, Dow Jones is approaching the oversold level, and 252, 250 is probably level of support. Financial sector, outperforming the market above 50-day moving average. XLK, we talked about consumer discretionary at the 50-day moving average. Russell 2000 tried to break out of this range, false breakout, sold off, and now trading below the 50-day moving average, also approaching below 200-day moving average, approaching the lower Bollinger Band. So 150 is probably support for IWM. Biotech usually lead the market to the downside. These are the levels where you can see support already below the lower Bollinger Band, potentially finding a support around 82.80 level. Semiconductors has been leading the market, trading below the 50-day moving average, similar to QQQ. Let's say retail sector, underperforming below the 2 standards, so oversold. Going back to March, I would say actually January lows for retail sector, also leading the market to the downside. Potentially could be an indicator for the spiders, if spiders will follow. If XRT breaks 43 level, potentially spiders will follow the suit. So I would start looking at the support level for biotech, small cap, retail stocks. Not a lot of interest in buying treasuries, so you don't see all-time high in treasuries. So again, you don't see the levels of panic. Looking at GDX, similar gold miners, similar picture. Not everybody is buying gold miners or gold, so everybody's kind of waiting. So definitely you don't see the levels of panic. XOP, spiders, oil, underperforming the market, staying right at the lower Bollinger Band, oversold. XLE, similar picture, trading right below the Bollinger Band and probably at the support that goes back to beginning of January. Alternative harvest stock, that's been on the minds of everybody. As I said, they follow the biotech, they follow the S&P. You can see marijuana, alternative harvest stocks, marijuana stocks. These are the stocks that also lead the market to the downside. We are back to the January support, end of January support. And this could be also a strong indicator. If you see small cap biotech stocks, XRT breaking these support levels, then that's where could be a leading indicator of what the spiders will do. So let's see how the euro is doing and US dollar. Weaker US dollar, stronger euro. So that potentially is a positive news for the stock market. We want, weaker US dollar. And also an important indicator to see if the US dollar is going to become stronger and euro to continue to sell, that's another bearish indicator for the market.